What was the White House trying to accomplish here with this news that came about right after my mad dash at 9:30? Okay, I think it was a genuine olive branch, something that allows the Chinese government to save face, start buying some American ag products. He stuck it to them right after this with, of course, a tweet. You know what? They need to buy some pork. They desperately need it because of a particular kind of swine flu that's proving very difficult to eradicate. And you can check that with Zoetis. They know all these things. Second, it gives the companies that were about to get slapped with the 10% tariff more time to move their manufacturing from China literally to anywhere else. Vietnam, India, it doesn't matter, as long as it's not China. ABC, anybody but China. Third, and perhaps most important, it gives President Trump cover to strong-arm our man, Fed Chief Jay Powell. He's not really our man, I don't know, it just came to my head, into cutting interest rates more aggressively. Tariffs are inflationary. We just got a consumer price index this very morning. It was a little too hot for Powell, 0.3%, even as real average hourly earnings decreased by 0.1% over the month of July. No one talked about that number. I thought it was staggering. Their wages decreased. So much for wage inflation. Now, a 10% tariff on all sorts of goods would have pushed consumer prices up even higher. Now, Trump can use this delay to show Powell or berate Powell or browbeat Powell that there's no real inflation, which will give the Fed more leeway to cut rates. Look for some tweets saying that. Probably tomorrow. Put it all together, and you know what you got? You got a vicious short squeeze, where everything that was hated is now loved, and everything that was loved is now disliked. And I didn't say hated there, because the stocks that benefit from this day of execution were big enough to help lift the whole S&P 500. Now, I got to tell you, I think it could get worse for the bears before it gets better. China now needs to contend with a slowing economy and these militant protests in Hong Kong that have now shut down the airport for 2 days in a row. You know what? I have a hard time imagining a scenario where all this ends peacefully. I think China may need to send in the PLA, that's the People's Liberation Army. And if that happens, they'll be fighting a two-pronged war, a trade war with us and a real war in Hong Kong. In that case, I'm betting the Chinese will give in, at least on agriculture, and do some buy. There's ample opportunity here, seeing as there are a bunch of calls scheduled between both sides. Now, I'm always telling you that the hardliners in the Trump administration have more influence on trade policy. I wouldn't see this as a big loss for them, although it is a loss. See, these tariffs are only delayed until December. They're not canceled. If China refuses to come to the table, they'll end up going into effect. As far as the hardliners are concerned, that's almost inevitable because they don't believe the Chinese are willing to make any concessions at all. I disagree, but who am I? Just a TV guy. Let's go back to the original premise. Coming in today's session, the bears expected the assault on the 10-year to continue, with the yield heading toward 1.5%, a ridiculous low number, frankly. Instead, because of the stay of execution on the new tariffs, the yield on the 10-year actually went up. And all the traders who have been keying off the bond market, they use this algorithmically, they had no choice but to buy stocks or cover stocks if they were short the bottom line. The next time you're terrified that everything is falling apart and the stock market's about to roll over, remember that we have a pro-stock market president who's willing to take action to turn around the averages. Maybe that's unfair to the bears, but it's fabulous for the bulls, which more than likely includes you.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.